All right, everybody, welcome back to another video here on Financial Friends. Today is Tuesday, and so therefore we will be talking dividends. This is a part of the dividend journey where I track a portfolio and just track it forever. That way you guys can learn something and I can learn something from you as well. Not any updates to the portfolio this week, just buying more SCHD. I felt that some more educational style videos, I kind of been putting these out recently, or just kind of my personal own experiences with dividends as a whole is a little more valuable than endlessly telling you I've purchased SCHD. So that's what we have for you today. If you like this type of content, go ahead and hit subscribe to Financial Friends. We post videos all of the time on everything investing, business, and finance related. Also, don't forget to hit the like button on this video in particular. We are also, as I mentioned, subscribing on the road to 1,000 subscribers. So like I said, hit subscribe, join the friend group. Let's dive into the number one reason why I personally invest in dividend stocks. And it starts here with economic moats. You have a cost advantage moat, a regulation moat, intangible asset moat, high switching cost moat, network effect moat, and digital moat. So there's more. And a moat can really be anything that allows a particular business that has an advantage in an area to hold that advantage or defend that advantage. This is going to be a crucial point moving through this video. Moats are not the reason why I invest in dividend stocks, but a moat is a part of the reason why I do invest in them. So I just wanted to bring this up. I have a whole video on this topic. I have Instagram posts on this topic, so I'll try and link that video up above and maybe the posts down below if you want to check that out. But a moat is something that is an advantage that they can then defend. Essentially, if you saw the thumbnail of this video, it's a river that runs around a building. That's really what it is, a river that runs around a castle. And so therefore it helps defend or separate the company, which is the building, from everybody else and keeps other companies away. So it starts with the moats. It starts right here. John Deere is the first company, Johnson & Johnson is the second, 3M is the third on this page here. We could see I did some highlighting for these so we don't have to read all of them. John Deere has a wide economic moat from both intangible assets and switching costs. They build a recognizable brand that has brand loyalty. It's reliable, high quality. They've solidified themselves as a market leader, allowing Deere to maintain a strong market position. And this is Morningstar. They have them with a wide economic moat. Johnson & Johnson carries one of the widest economic moats, they say, intellectual property in their drug group, switching costs in their device segment, and strong brand power from the consumer group, which is soon to kind of be spun off of the company, but nonetheless, a wide economic moat. 3M, even though they're going through some trouble right now, has a wide economic moat based on intangible assets and cost advantage. Now, of course, this is just one group of people saying they have a wide economic moat, but I think we can all agree on these sort of generalities about these companies. Nonetheless, Hershey, wide economic moat, strong intangible asset, cost advantage, dominant share at home, leading brands, sufficient resources. And they even say that they could see them generating returns on invested capital that remain above its invested capital over the next 20 years. Procter & Gamble, they have massive intangible assets. They also control 20% share of the baby care market, 60% of blades and razors, 20% of feminine protection, and more than 35% of fabric care. They're a trusted manufacturer, and they operate with a product set that spans the entire store. Wide economic moat. Waste management, wide economic moat. Firm's ability to generate excess returns over the next 10 years, probably over the next 20 years, an irreplaceable landfill footprint. They are a part of the public companies that own or manage more than 60% of municipal solid waste landfills. Waste Management operates 260 of those roughly 1,500 landfills. 30% more than Republic, which is one of their major competitors, and almost 3 times the size of Waste Connections, another competitor. Wide economic moat. Moving forward, the last one, which I think is pretty arguable, at least by most, a narrow economic moat for Apple, but nonetheless still some form of an economic moat based on switching costs and intangible assets. So that was a mouthful, obviously. Why do I sit here and say all of this? Why is all of that important? Now remember, these are all positions in my portfolio. These are businesses with strong and defendable advantages, a moat. And it leads to a company that will be able to hold a meaningful market share 20 to 30 years down the road. Now, why is that aspect important? It leads into this. You've seen me post these all over social media, how you can get free gas or free candy. You take a specific company, pardon me, you figure out what you normally spend in that company's industry or area. For ExxonMobil, we did gasoline. For Hershey, we did Halloween or candy more broadly. And you figure that number out, figure out how many shares you need to purchase, what the cost of those shares would be to you, and that is how you can then replace whatever you're spending on gas or on candy or on groceries or on McDonald's with dividend income. And your dividend income or cash flow can then cover the cost of that annually. We did it with Starbucks. We did it with Target, McDonald's, as I already mentioned. Now, I do this for fun and to kind of show off the power of dividends, but in reality, these stocks hold value. They then create cash flow and provide you with one of the ultimate tools in the entire world, not just in finance, flexibility. The option to choose what you want to do. Now, of course, these specific examples are getting a free coffee or getting free groceries, but what if those free items turned into living expenses or bills? We then get this little equation here, okay? Asset cash flow greater than expenses. This is the key to being financially free. If you could take your expenses, no matter what those expenses are, and allow your assets, whether it's owning a business, owning real estate, owning dividend stocks, bonds, whatever it might be. If your asset cash flow is more than your expenses, you no longer have to work. The things that you have purchased with your hard-earned money from your active income from your job, you now get in passive asset cash flow, and you don't have to work anymore. Your bills are paid. You know that the bare minimum is covered for you so that maybe you're running at a surplus and you can go spend willy-nilly. Or maybe you're just barely covering all of your expenses, but you now know that your job is optional. So we go back to this. Dividend stocks hold value, create cash flow, and provide me with flexibility. Now, this hold value point is the reason I mention all of these economic moats. If these businesses were poor businesses that could not defend their advantage for the next 20 to 30 years, they probably wouldn't be a great spot to hold cash. Why? Well, the value of the stock, the value of what I say put in, maybe this $5,792 in Hershey, would decrease because the value of the company is going down, and my dividends at one point or another might have to be cut because the company cannot generate money anymore. The company doesn't have a moat or an advantage over others, and there is limited switching costs, so consumers then go to a different company. There's no network effect, so they switch to where everybody else is, and you now cannot generate cash flow, which means you cannot pay out your investors. So I don't want my assets to lose value. I want them to also be able to continue to produce cash flow, and an economic moat is crucial. So why do I invest in dividend stocks? What's the number one reason? It's to fulfill this formula, but economic moats are crucial to that, and that's why I wanted to explain that. And also, something that pays dividends is crucial to that as well, which is a dividend stock. So thank you very much for stepping in and tuning in to this video. My name is Brendan. I am everything here at Financial Friends. I hope that you decide to spend some more time with me another day. Go ahead and subscribe here on YouTube. It's free. Probably will generate you some assets later on in life. I'm also posting daily content on TikTok, Instagram, and Twitter, so make sure to check those out. The @ is @FinFriendsYT. Links are in the description. I will see you all in the next one. Don't forget to like and subscribe. Take care.